Could we get a credit event this year? Could we see September or October or November of this year, maybe December, where shit hits the fan, where the stock market just drops 20, 30% or more? Bonds just rip, gold goes up, crypto maybe panic sells there. Could we see that? Because look at it, right? Let's go back to 2020, right? We had very fast rate cuts. We had low rates for some time, and we have massive money printing from the central banks that caused markets to just shoot up and do 100% return from the bottom of COVID. Real estate went up, stocks went up, crypto went up, everything did well. And then all of a sudden in 2022, you had the fastest rate hike ever, going from low rates of 0 to 5% plus now in the US in the span of a year time. So you got the fastest rate hike, and then also this year, 2023, you got the fastest rally, the most hated rally in the equity markets, where NASDAQ is now 5-6% away from highs, where everyone who is short basically have gotten out, at least most of them. And now everyone's looking at this market and saying, okay, everything's fine, the growth is fine, GDP is fine, the labor market looks fine, no recession according to the Fed this year, right? Recession's out, and we're close to all-time highs, and we got the fastest rally there. Now where do we go? Do we continue? Do we make all-time highs? Could we see a complete reversal where you got the fastest rally and then all of a sudden the fastest crash that comes in, 20-30% drop, and then you get the Fed coming in and doing the fastest pivot ever to see, right? That anyone has ever seen, where you got massive rate hikes and then all of a sudden very short pause and then boom, rate cuts right there. Could we see that? Well, I don't know, right? I'm not saying these things are going to happen. That's not what I'm saying. But I'm saying that according to this Bloomberg article that comes out, and I'll link it in the description for you to read up on it, there are some options traders that think we could see the fastest U-turn, especially from the ECB, the European Central Bank. We could see the fastest U-turn and get rate cuts there. Now, let's read into this Bloomberg article here. It says, options trader wager on fastest ever U-turn from ECB. Surging bets around 96.375 strike suggest cuts in September. Rate cuts, right? And why from the ECB, right? As we've heard from the European Central Bank, they basically sound dovish here, and they basically sound like that they're going to set rates here for some time, and then what happens after rates have been set and we get a pause? Well, actually what we get is we get the pivot. Now, we don't know when this pivot is, but according to these options traders, they think it could be as early as September. And why would we get a pivot? What would cause a pivot? The pivot would be caused because something is happening. So let's go through this article. It says, traders in the options markets are betting the fragility of the Eurozone economy will force European Central Bank into its fastest ever monetary policy U-turn. Money market pricing points to two more rate rises, a 25 basis point rate hike this week, which we've heard, right? The Fed also penciled in 2 rate hikes, and they did tell us around, even in the central bank, ECB, telling us that we could get 2 more rate hikes this year. But the markets are not believing it. Even in the U.S., they're not believing that we're not going to get that second rate hike. So while odds favor a further increase to a record high, but options market, which give investors a cheap way to wager on alternative outcomes, suggests that there won't be a second hike, and cuts could come as soon as September to avoid too harsh a blow to growth. Now, here's the thing. I think unless the central banks see something and believe that, yeah, something is going to eventually break, something is going to happen, then yes, you're going to get those rate cuts. I don't think it's going to happen very soon unless that event happens. And if these options traders see that yes, this event is coming up in September and they're going to have to start cutting rates, then yes, then they could be 100% right. So it makes me think that, do these options traders see something that other people are not seeing, that the stock market is not seeing because it's almost close to all-time highs, or are they completely wrong? Which they can be, right? The bond markets didn't think that the Fed would continue to hike rates and get to 5% where it is right now, right? So it can completely change, and we could see that once September comes, and according to the data. The key will be the data. The key will be the jobs data, the growth data. Do these numbers deteriorate hard? Do we see the unemployment rate already just spikes in September, right? Now, I could also throw another example. We did get rate cuts. If you look in the past recession in the great financial crisis in 2007, 2008, you did get rate cuts start to come in before the huge event in September of 2008. So, sure, rate cuts can be good for the markets, but it may be temporarily. And if you do get the rate cuts and you get an extension in the equity markets, well, when you look at history, previously when that happened, after some time, finally in September 2008, you had the final blow, the final event, the plunge that caused the markets to completely tumble down. So this will be really interesting to watch out and see. Again, the data, the growth, the jobs, the rate cuts, maybe hinting towards that, hey, something's coming down the pipeline. Be very careful, be very cautious. I know when rate cuts happen, you think that, okay, this is good and you should jump in. But according to where we are right now, with inflation and with how much we've hiked, it makes me think, especially twice, that I don't think this is really a good sign, right? Especially when you look at history. And most importantly, don't forget about oil. I've been mentioning about this crude oil sitting at $80 a barrel. If that starts to creep up higher and higher and higher, could we see higher, no cuts at all, higher rates above 6%, and then the fastest U-turn, which the options traders are thinking? Maybe not September, maybe at the end of this year. Anyways, let me know what you guys think. Leave a comment below, subscribe, hit the like button, bell icon to be notified on the next video, and I'll see you guys around. Cheers, bye.